Hey guys, Akil Stokes here of Tier1Trading.com and welcome back to another Weekend Trading Edge video. In today's video, I'm going to share with you two new trading opportunities that are on my radar for the week ahead, as well as update you on the strategy development journey that I've been sharing with you since December. Now, real quick, if you haven't done so already, if you're interested in learning how to trade, make sure you head over to www.tier1trading.com. Lots of cool educational resources over there for you to check out. I recommend starting off with the risk-free trial membership. You get 14 days on the platform and there's no auto bill or anything like that. After your 14-day trial membership is up, you are just kicked off. Today, we're going to start off with the pound yen. We're going to start on the 4-hour time frame. You can see that the pound yen has recently been in a period of consolidation. Price action has spiked up from the 155 even handle up to about 160s even. And you see that we basically just started to go sideways in this little channel. Now, consolidation or contraction, I should say, lead to expansion. So what I would expect from this formation is a breakout. Now, which way are we going to break out? Well, we could break out to the upside. We could break out to the downside. Today, we're going to focus on the potential upside movement. Now, here's what's important. When I say that word potential, it doesn't mean that you should look at this and automatically just buy it right now and look for a potential break. You can. I mean, that is a very aggressive way of getting involved. Me personally, what I like to look for in these situations, because this is a situation where it's not quote unquote a no-brainer in the direction that we'll break out in. In these situations, I like to make my predictions in advance, and then I like to wait for the market to show its hand. After the market shows its hand, then I like to get on the first chance opportunity on the move, and I'll explain what I mean. So first and foremost, if you're looking for an aggressive way, again, the ideal way would be to establish a position either right here at the top or if we get another retracement down. We don't have a clear ascending triangle here. That would give us a completely different story if we did, a much more positive one for a bullish break. But we do have the pattern of the market putting pretty much equal highs and putting in higher lows, which would help the case for a bullish breakout. And that's the reason we're focusing on this opportunity. So if price action were to come down here and retrace, and maybe you get a signal on a lower time frame, you could position yourself for a potential breakout to the upside with low risk and a chance to catch the move up. Now, waiting for the market to show its hand, which I just spoke about, that's waiting for the actual breakout to happen. So the violation of these highs, a higher high, a higher close, and then either joining the breakout right after the violation happened or waiting for the pullback and the next opportunity to trade it up. Now, the next question we have to ask ourselves is, if price action is going to continue higher, then where is price action likely to go to? Well, it would be our next VS1 level. Our VS1 levels are those red and green boxes that you see on your screen. They represent visual levels of important support and resistance. You also get to download them with your trial membership. So the thing I talked about earlier gives you that benefit as well. But I'm looking for a move to the VS1 level, which comes to about 160, 150s. But structure is the starting point of when I make my prediction. I want to look for other things as well. And something I want to do is I want to add Fibonacci confluence, or see if we have Fibonacci confluence. So I'm going to take my Fibonacci extension tool from the swing low to the swing high of this flagpole here and back down and see if anything lines up. We're going to have a 127 Fibonacci extension right below that VS1 level. I'm also going to take my Fibonacci extension tool and use it a little bit differently. I'm going to take it from really the deepest retracement of this consolidation area to the highest peak before the pullback here and back down. We call this a Fibonacci inversion. And you're going to see that I have a 1618 in this area as well. So really anywhere between, if you want to be very cautious, 161 evens. And I guess the biggest one would be up here. This is a little bit too ambitious for me, but let's say 161 even and 161 50s is a nice level to shoot for potential targets. Now, again, I know it doesn't look like much on your screen right here. This is the pound yen, but remember the top of this structure zone right here is right above the 160 even handle. We're looking for a move to 161 or 160 150s. That's 150 pips of potential opportunity there. Next up, we're going to go to the dollar yen. And I was avoiding a lot of dollar pairs this weekend because we've seen a lot of movement in the market due to the jobs report that we had on Friday. There's actually a lot of good opportunities where if you look at the dollar pairs, they're trading right at crucial decision points, meaning right at previous levels of structure. But we're going to really need to wait to see how the market opens first to see if those structure levels are holding and we start to see a little bit of relief, or to see if price action is going to blow through them and we need to aim for the next structure level. So I avoided a lot of the dollar pairs because of that. But what's interesting here on the dollar yen, and I'm on the 4-hour, but soon to go down to the 60, is we actually have an advanced pattern formation that has completed that's going to give you a secondary opportunity at entering. We have what's called a cipher pattern. If we look at, I'm going to take my tool out here, another downloadable tool with the 14-day trial membership. I feel horrible. I'm like plugging this all day. That's not usually me, but it's on my mind. This is our pattern recognition tool, but this is going to be our X to A, our first leg. Our first retracement is going to be our A to B. Our extension up here is going to be our B to C. And then you can see as we retraced right down here and came down to our 786, that was our D completion for what is a bullish cipher pattern. Now, the completion zone of these patterns isn't just, the price point. It's the zone between the price point and the violation point. So this box right here. So anywhere within this region is fine to take this cipher, and it's still valid as long as it's trading inside this zone. Some traders like myself, I'll take an aggressive entry right at the decompletion. Other traders wait for price to go into that zone. They look for a secondary reason for entry, maybe like a higher high, higher close, or a double bottom, something of that sort. But this is a valid pattern formation. So whether you are a pattern trader that's late or maybe didn't get involved like me because of the Friday news, or whether you're someone that's looking for a structured trade, so looking for a pullback to this level of structure and wants to add the advanced pattern formation to their CTS score, that's 3 more points right there. This is a decent opportunity. Now, just remember, targets do have to be rolled, or I guess they don't have to. You can trade it however you want, but targets are going to be rolled a little bit. So the target one is not right there anymore. We have to take our Fibonacci retracement to our new low water point right here, low water mark. And that 3D2 is going to be right at the 133 even handle. So you're looking at a move like this. If you're to enter at market, boom, and the stop loss, that's right in the same area like that. So it's going to end up being a little bit better risk reward than what the cipher typically gives us. So before we get into the strategy development update, I want to update you on something else I've been doing. I've been doing YouTube videos here almost every day. So make sure you check them out and you stay in the loop. If you're not subscribed, do that. That way they put the videos in the feed so that you don't miss them. We're covering some pretty cool topics. But I had a great interview recently with a good buddy of mine, Michael Lamott, and it's certainly worth checking out. It's called Trading Goals and Trading Traps, where it talks about some of the goals that traders should have and also some of the traps that traders fall victim to when trying to achieve those goals. If you don't know Michael, he's a great human being. He spent 10 years trying to find the trading stuff out, mainly focuses in the stock market, but spent 10 years kind of failing before he really figured things out. So he's learned some amazing lessons during that time. So make sure you check it out so you can learn from him and hopefully don't make the same mistakes that he did and have your trading journey take a little bit shorter than his did. Now, to update you on strategy development, it's kind of ironic. Last week, I told you I was midway. I finished testing one pair. I was midway testing the pound dollar and things were looking great. Finished up the testing and actually went very, very, very poorly, right? So I've got 4 pairs done. 3 were positive so far. 1 is negative. You're seeing a list of pairs in front of you. Those are the pairs that I typically look at. I'm not going to test all of them. Some of them have spreads that are too wide. Some of them are just correlated in a way that I'm not interested in. I don't want to kind of overexpose myself to some particular currency pairs. That was a $30,000 mistake I learned a long time ago. But the idea is I am going to try and test all of these pairs, or the majority of these pairs that work with the strategy. I'm then going to try to put together the best portfolio of anywhere between hopefully 4 at a minimum, 8 at a maximum. And again, different elements I got to go into, days of the week, time of the day, stuff like that. But so far, the process has been exciting. Now, I would tell you what, despite euro dollars clean as a whistle, which is surprising, despite the euro yen and dollar yen both being very positive, they do have some red flags as well. And the red flags are that some of them have massive drawdowns, some of them have massive losing streaks. And all in all, as an individual pair, it's nothing I would trade. And that's why I want to show you the little chart on the side. That's actually a combined total of kind of all the pairs together as a portfolio. And we spoke about this on this channel before, but it's important that you look at the story and not just the results. It's easy to look at the end return on investment or the end profit factor and be like, hey, this is great. But it's the story of how you get to that end result that matters the most. And it's not even the story of any individual pair when you end up kind of building your trading portfolio. It's understanding how those pairs work together. Again, think about it like building a team, right? I'm from Philadelphia, PA, so I was a group of Sixers fan, right? Allen Iverson was a great player. Great player, probably one of the best small players ever in the history of the NBA. However, he was not really an efficient player. He would score a lot of points, but he would take a lot of shots. And, think about him as being kind of a high-performing pair that goes through big losing streaks or massive drawdowns, right? You get your really good, but you also have your really bad. It comes with the territory. It's okay having one player like that on the team, but if you were to have 2 or 3 Allen Iversons, that can be a lot of trouble because now you have a lot of shots. And if they all go cold at the same time, your team's going to be in trouble. So it's important to find different players on your team. You have your big performers that maybe come with a little bit of a drawback, right? But you also have your steady Freddies, your ones that are going to show up and be very predictable day in and day out, week in and week out, month in and month out. And what you're trying to do as a coach and what you're trying to do as a trader is you're trying to pick these different personalities from the pairs out, and then you're trying to put it together so they make the perfect team. You find a team that works the best with each other. And for me, the perfect team is the one that creates a slow and steady growth on my equity curve, because if I have slow and steady growth, it allows me to do some really cool things on the wealth acceleration side as far as like position sizing strategies and whatnot. So that's something to keep in mind. Again, it's we're far off from that process right now, but I do like the transparency of kind of showing you what's going on and letting you know what's going through the mind, especially for you guys that are new to going through this process. I think it's very important to understand because it is an important process in you setting up your future and, making sure that the work now is worth it later.